Welcome back to the show, everybody. Check out these headlines this morning. The flare battle continues. We're going to talk about it. Goldman Gensler, ladies and gentlemen, speaks on enforcement for cryptocurrency as the SEC sues a U.S. exchange. We got that and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Make sure you give us a like and subscribe. $922 billion market cap for crypto. It's up 3.2%. Bitcoin now 18,900, up 8.3 on the 7-day. Ethereum just over $1,400. It's up 11.4%. Tether market cap, they say, is $66.3 billion. XRP right now at 37 cents, ladies and gentlemen, up 6.5%. Take a look at this. It is the end of year. It is the beginning of year. It is the end of tax year 2022. And if you're not sure what to do about your crypto, check out Coin Tracker and also have a link for Clinton Donnelly as well below. Crypto Portfolio, it is the best way to track your holdings on the different exchanges. You can link them up safely. I've been doing this for a year now, well, actually almost 2 years. You can link your exchanges up and be able to track your earnings and losses and be able to print out a very, very detailed, simple report for your accountant as well. Make sure you check that out. And it's 10% exclusive off for you guys right now if you click that link. Look at this. 8 major media companies, including Bloomberg, Financial Times, and Reuters, have demanded public disclosure of the 2 individuals responsible for guaranteeing FTX former CEO Sam Bankman-Fried's $250 million bond. And I don't think there's any reason they should be hiding the names of these individuals. There's no question about it. We will keep you posted. They should release that information. Somebody's got a lot of money riding on SBF to put up that money like that. Take a listen to this. Sam Bankman-Fried has released a written statement detailing his account of FTX and Alameda Research collapse, including approximations of each firm's financials before it took place. As you can imagine, it doesn't implicate him at all. Yeah, the document runs through the FTX pre-mortem overview. Oh, so nice of him to give us such a detailed review. He says, in early 22, Bankman-Fried believed Alameda roughly held $100 billion in net asset value. However, only 7% of which was considered to be liquid. By November 10th, however, the firm had just $11 billion in assets left, and only $3 billion of which were liquid. Oh boy. This triggered a wave of contagion comparable to the collapse of Three Arrows Capital in June, much of which was felt by FTX due to Alameda's large margin position on the platform. Nevertheless, Bankman-Fried claimed that FTX still held $8 billion in assets of varying liquidity before he stepped down as CEO. Furthermore, another $4 billion in potential support had reportedly been tabled by other groups in the form of signed letters of intent. Though he believes these pathways have been abandoned, FTX's new leadership, even now, I believe that if FTX International were to reboot, there would be a real possibility of customers being made substantially whole, he said. Oh boy. Yeah, that's I don't want to go to jail. They don't have video games there. Bankman-Fried has been widely accused of committing fraud and theft together with Alameda Research, commingling user assets at FTX with Alameda's trading funds. FTX new CEO John Ray, who oversaw Enron's bankruptcy, testified as much in front of Congress in December as we all covered here on the channel and saw, while MicroStrategy's executive Michael Saylor has claimed the same on multiple podcasts. Bankman-Fried denies any such claims, but here's the problem, ladies and gentlemen. The problem is Alameda CEO Caroline Ellison and FTX co-founder Gary Wang have each pled guilty to defrauding FTX's investors in collaboration with Sam Bankman-Fried. Oh, the plot thickens, Sam. You can write all the letters you want, but this is a problem when you got the other 2 people that were working with you to do exactly what they said. Fraud. right? So here we go. Now to the next area here, which is the general idea over time, leveling the playing field for all, thus incentivizing non-airdrop participants to engage in the network when it comes to Flare's airdrop and the 15% that are delivered and dropped to everybody who's an XRP holder. And then the 85% is to be determined as we go forward. Now, with that being said, this was all really due to a backlash of comments coming from David Schwartz. I want to cover this because I covered it yesterday, but I want people to understand exactly what's being said here because it's complicated for me. There have been so many changes, and he speaks to that here. He basically says, he says, I feel bad saying this. I love the project and want the best for it and want to believe it's the best about it. But his honest opinion is that they leveraged the XRP community to grow and weaken their promises drastically when they felt they didn't need it anymore. That said, that doesn't make them dishonest or make their project a bad one. XRP evolved and didn't keep some promises made in the early days. You can love Flare and love XRP too. It's not one or the other, and I do agree with that. But I don't have happy, fuzzy feelings about how it went down. And that honestly is really where I've been with all of this back and forth, right? And it just leaves you very confused and kind of uneasy about how this thing will take off. And I hope that it does extremely well also. However, Hugo does come back and says, we've been completely clear about our reasoning for that, implementing the FIPO1. And it says here that it puts new entrants on an equal footing, which in his opinion is a must going forward if Flare is to have a chance of reach its potential from the proposal. In other words, saying basically that we want to open it up to where people who didn't get the 15% could participate and feel excited about it as well. The overall point from David, or one of the overall points is that basically he was saying you're creating inflation by doing what is being done with Flare Network. So then he says here, to response to Kieran Kelly, shout out to him for the question, simple answers please. I've got a little brain room this week. He said, I think XRP community were promised an airdrop 1-to-1 over a time period, 15% initially. Does the XRP community still get it automatically, or must they now wrap the Flare to get the remaining balance? He says here, there is no remaining airdrop balance anymore. You just get the 15%. If I promise you 2 cows, I can't give you one and tell you to get it pregnant for the remaining balance. That's about as straight ahead as it gets right there. So look, I hope that Flare gets off the ground and does well going forward. It does have me uneasy about how it's all come to be in the moment we're in now, but that doesn't keep me from, accepting my Flare. It doesn't keep me from knowing that I'm going to stake my Flare. So, all of this is really like cautious optimism is where I'm at this point. And I really do hope for its success. And I do hope also, to Hugo's point, that we see a larger base of people want to come in and participate in the network as well. So we'll keep an eye on that. Now, let's pull back and go macro here, because the right side of the aisle in Congress is taking the position, the moral high ground here. And it's an honor to be selected, says Congressman John Rose, for the House Republicans Conference to serving on the Financial Committee. It says, under Chairman Patrick Henry's leadership, we will hold rogue Biden officials like SEC Chair Gary Gensler and CFPB Director Chopra accountable. Okay, well, you know what? We got to see it to believe it, right? And then they're also saying there will be a new panel focus on issues related to digital assets, financial technology, and financial inclusion, and be chaired by Arkansas Representative French Hill and Ohio Representative Warren Davidson serving as vice chair. Now, that's something Warren Davidson's been talking about a lot, is putting together a new oversight for the crypto asset division. So, now, this is Gary Gensler basically bragging, because what they've done is this is exactly what John Deaton has told us, and we were aware of it too, right? SEC is going to sue a U.S. exchange. Hello, it just happened. Here it is. Goldman Gensler. The SEC charges Genesis and Gemini for the unregistered offer and sale of crypto asset securities through Gemini Earn. Crypto intermediaries need to comply with our securities laws. This protects investors. It promotes trust in markets. It's not optional. It's the law. Oh boy, I tell you. Here it is. There it is right there, right? And this is even more disturbing. If you trigger easily, don't watch it, because I got to give you this. I want to give you look, there's a lot in this that I want to give you, but I want to take you to a heart of this where he gives the plan. And it's exactly as we've talked about here on this channel. You know, Gary Gensler intends to show you the runway and what they're going to do. And I've talked about this plenty on this channel. The crypto market does not mirror the conventional trading markets like the New York Stock Exchange. You and I do not go to the New York Stock Exchange to buy Apple or Tesla stock or Amazon or what have you. You go to a broker-dealer. The broker-dealer does not custody that for you either. The broker-dealer is not allowed to run a hedge fund alongside of the crypto exchange either. You know, some of these things are not wrong. But, you know, the problem is the lack of clarity, that because now they've sued Gemini over this, you know what's coming next is that other exchanges are going to start delisting. They're going to start stopping earn programs, things of this nature. But let's take a listen to what he says in this clip right here as he maps this out.
In 2023, what are your goals for regulating crypto next year?
I've got one goal, is that these platforms, the exchanges, the lending platforms, come into compliance. They can do that appropriately, working with the SEC, or we can continue on the course with more enforcement actions, and I would have to say that the runway is getting shorter.
Oh boy. And let me bring you to this now, because this is where he really shares the plan and what they're doing, and it's exactly what we've talked about on this show. Take a listen as this clip runs here.
On their platforms, providing interest returns to their customers, and then trading against their customers and the like. The basic protections in our securities laws for 80 or 90 years apply to this field as well, and so it's really on them. We've been clear. We can use some exemptive authority to tailor things, as you said earlier, but it's not to drop the basic protections of separating out these businesses into a separate exchange. And again, I remind the public, we don't let the New York Stock Exchange also run a hedge fund and trade against customers. Separate out a separate broker-dealer, separate out separate custody function, and really use the time-tested rules of the road that are on the books. So it's kind of up to them, or will be, of course, following, as we've given good advice to each of these agencies around crypto lending. Actually, the way it's organized is often similar to a mutual fund. You're collecting up the public's funds, you're offering a return to them, so come into compliance.
There you have it. I mean, he's telling you right there that that is a securities framework, ladies and gentlemen, and I don't see anyone stopping him, but I see a lot of people talking about it. And listen, I don't hand out trophies until it's time to hand out trophies, right? So the right side of the aisle can talk all they want, and I'll be happy. I'll be the first one to celebrate them if they get this guy gone, because we need somebody that could easily be in there and say, we have posted on our website exactly what you need to do to be in compliance. If you don't fall in line with these bullet points that we shared, we're coming to get you. Now, that to me is the way a leader should lead, right? Pretty obvious. But let me give you this other little clip here where he brags about a case that just got a ruling in the favor of the SEC. And yes, it is a case that John Deaton is a friend of the court on. It's the library case. Take a listen.
And books and records violations, as you talked about earlier. And yes, we have a robust enforcement history in the crypto space. I think over 100 actions, a couple dozen while I've been here as chair, against crypto exchanges, against crypto lending platforms, against, of course, tokens. We had a very big win recently in a case around a crypto token called Library. Unfortunately for the investing public, the entrepreneurs in this field have chosen, and it's a choice, they have chosen to try to skirt the law, whether they're setting up overseas and they're servicing overseas actors. That's for other jurisdictions, that's for other regulators around the globe. But if they're tapping into U.S. markets, they need to come into compliance.
There you have that, ladies and gentlemen. Now, he did mention they do have the power to issue exemptive orders in some cases, right? Well, I got to tell you, all of this action, all of this suing the U.S. exchanges, take a look at what Hector Lopez says right here, because I think he nailed it. Here is an actual clip, a screenshot of the Securities Exchange Commission complaint against Genesis Global Capital and Gemini Trust Company. And I'm going to read this to you here. Through an investment opportunity, the defendants called Gemini Earn program, investors tendered crypto assets to Genesis. In exchange, Genesis promised to pay interest on those assets to investors through this unregistered offering. Defendants raised billions of dollars worth of crypto assets, principally from U.S. retail investors. Well, is this not exact same thing that proof of stake is in Ethereum? See, this is the rub, right? It always keeps coming back to ETHgate. It always keeps coming back to the free pass. What will Gary Gensler do? Will he show us that he has just as strong a hand for the entire market, including Ethereum and their unregistered ICO? Time will tell. Not financial advice from me or anyone else. Just my digital perspectives. Buckle up, ladies and gentlemen. I think this market's going to find a new low. Not financial advice. Just my digital perspectives. I'll catch all of you on the next one.